Welcome to Checks and Balances. I'm Michael Vincent. This is James Blair. And this week we're joined by Laura Sheehan from Lighthouse Mortgages to talk about 5% deposit loans.
Okay, Mike, this is fun. You know I enjoy doing the podcast, highlight of my week. However, we like company. We like to mix it up.
We're social guys.
Laura, mortgage broker at Lighthouse, the debut. How are you feeling?
Very excited to be here.
And you've got, did not sound very genuine. But that's okay. We know
I just don't want to overshadow you.
We know on the inside that you're very excited.
Yeah.
5% mortgages. You come in with an absolute doozy at us.
Yeah.
Nobody talks about 5% mortgages. 5% mortgages aren't a thing. What are they?
They are a thing. They're definitely a thing. So you can get a property with only a 5% deposit. So that's not necessarily the deposit that you pay to a developer or the real estate agent. That is the deposit that you need to give to the bank to get the rest of the loan to buy the house.
Cool. So who can qualify for one?
Okay, so you have to be a first home buyer and you have to live in the property. So this doesn't apply if you're buying an investment property. It has to be your first home and you have to live in the property. There are some other criteria around income. So if you're a sole applicant, you have to earn $95,000 or less. If it's a joint application, it's a combined income of $150,000 or less. And if you're a single applicant, but you have dependents, that $150,000 also applies to you.
Does James count as my dependent? Do I hit that cap?
He does pay for breakfast.
Well, then, yes, you are dependent.
Nice, okay. All right. Let's get a mortgage application.
Yeah.
Mortgage application going. So $95K for a single, $150K for a couple.
Yep.
Slight side note, the $150K if you're a single with dependents, has that always existed in the kind of caps before, or is that something new?
It's been a thing. There have been changes recently to this product, not necessarily around income, more around the purchase price of the property. So it used to be that you could only qualify for this loan if you were buying a house for a particular amount of money. That has been scrapped. So now you can buy a property for any amount. You just need to be able to meet the servicing for that loan.
Yeah, and I think we're going to talk about those house caps and how big of a change they are in a second. But with those incomes, something that comes to mind straight away, $95K or $150K, despite the deposit, how much can you borrow? Like, are we just talking about people who live in Invercargill who are going to be able to buy these houses?
No, if you're a single applicant, say you earn $95,000, average cost of living, no other loans, no other debts, no dependents, you could probably borrow around $550, $560. If you add in a boarder, so you have a friend living with you, they're paying maybe $175, $200 a week board, that will take you up to around $600,000, maybe $615,000.
Mike, 600 grand. Is anyone buying anything in Auckland?
Yeah, look, but that's just for the singles. There are, again, you can do this if you've got a couple, more income, that sort of thing. But there are other sort of schemes or sort of things that are run by the government of Kāinga Ora, which can help you get into a house as well. The first home partnership scheme is a really good one. We see quite a lot of people who perhaps don't fit this space using that instead.
Yeah. Is that the one where Cindy can move into the house if she needs a place to crash for the night?
Top and tail.
Yeah. Okay. Yeah. Maybe invest in a queen bed or a king bed then as part of the...
Especially with big Luxon on the way.
Yeah. So $600,000. Sorry, was that for a single or was that for a couple?
That's for a single applicant.
Okay.
If it's a joint income, assume you earn a combined income of $150,000. That will take you up probably an extra couple of $100,000. So maybe $800,000-900,000. Again, assuming those average cost of livings, no other debts.
Yeah. So that $800,000 mark, for example. We were the other day looking at developers, and we were seeing in Mount Wellington, for example, $750 for a 2-bedroom townhouse. So it does show that we're not just talking about mighty Southland. A lot of love for the people down in the deep south. My father-in-law, who I know watches this because he commented the other day going, that deck that Mike built is not sounding good.
Here we go.
It's not just for Jakes, but people in Auckland as well. That makes a big deal.
Yeah.
So if people are thinking about this, they've just heard of the 5% deposit loan, they're thinking, actually, I think I might qualify here. What should they do?
Definitely talk to an advisor. not every bank on the market offers this product. So definitely talk to an advisor. They will be able to recommend the bank that is best for your situation. The criteria is pretty much the same across the board. There are other criteria, so you have to have been in the same job for 12 months. If you haven't been, then you have to be able to evidence that you've been in the same industry for 2 years. There are some kind of nuances around the type of property that you're buying. If you're buying an apartment, it has to be a certain size. So there are small deviants away from those 3 main criteria. And an advisor would be best placed to kind of talk you through those, present a really thorough, fully packaged application to the bank, and that will put you in a better position to get approved.
Yeah, and I think that's a really important point there, is that not every bank offers these products. And just because you meet the criteria for the 5%, i.e. income cap, employment, that sort of thing, you still actually have to meet the bank's servicing policy. And each bank has slightly different servicing criteria, servicing policy that they use to work out how much you can afford. So, it may be better that you go to one of these banks over the other. You might be able to borrow a little bit more.
So if we're coming back to the 5% piece, I know you guys
stuck on this 5%. Coming back to 5%.
It's a thing, we're not lying.
Okay. So I've got a few different theories, right? One is the fat cat bankers are going, not as many mortgages are getting approval. We need to funnel them through so we can get our big profits and go and sit on our fat water cash. How is it the house price cap that has made the big difference here and has meant it, I guess, more applicable to people?
Yeah, it is. So when the old house price caps, they were the same for the first home grant and these sorts of things. You and I know when we do webinars, we touch on this, and I used to put the slide up for the first home buyers grant. I'd be like, we're going to talk about this for about 30 seconds because no one ever qualifies for it. Next slide, please.
It was a unicorn.
Yeah. Now we actually have to spend some time on it because the regional house price caps mean that people do qualify for the first home grant. Removing the house price caps altogether for the 5% deposit loans is, that's a game changer for this.
Yeah, because the house caps previously, say in Auckland, what was
675?
Yeah. And now it's just all based on, in that example with the income you spoke about before, Laura, we're talking about somebody might be able to buy something for a couple, 750, 800.
Yeah.
You go, that's completely...
It's doable.
Yeah.
I guess the other piece to touch on before we wrap up, is there any, when it comes to like getting better interest rates or cash back and those sort of things, are they off the table or are they still applicable?
No, not at all. They do definitely still apply. So normally if you're borrowing a large amount from the bank, so if you've only got a small deposit, say 10%, you're kind of almost instantly hit with an addition to the interest rate. So it could be like 0.25 up to even 2% sometimes. So rates that you see on a bank's website, for example, 4-5%, if you're borrowing 90%, they will instantly like slap a surplus on that because it's an additional risk to the bank. With these 5% deposits, there are still really, really good interest rates to be had. Ones that apply to even if you've, the same interest rates if you've got a 20% deposit. So you could be looking at 4.5%, 5%, and you still get cash back as well, which is really useful for paying your legal fees, your moving in costs.
Awesome. 5% Laura, it's been a pleasure. If you want a 5% mortgage, text 5% Laura. No,
0800,
don't. 0800. That's not a thing. That won't go anywhere. It is really interesting that this is, wow, you guys are sticking to the whole piece that it's been there forever, that this is an option, and for first home buyers, another thing swinging in your favor. We'll wrap it up all there. Thank you very much for joining us, Laura. Thank you very much for joining us. We'll definitely have you back. Please make sure to subscribe, give us a review, and we'll catch you next week.
Cheers.